Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, what are we looking at to kick off the first week of February 2021 and the first trading day of February?
Hey, Jill, thanks for having me here. Yeah, so we had an interesting development going on in the marketplace right now. Over the last week in January, we had some volatility, which we haven't seen in quite some time. Nothing really unusual about that. We have right here, when we closed on Friday, we made what's called it wasn't a bearish engulfing candlestick, but on the weekly time frame it was just shy of that, but it's still a bearish activity nonetheless, because we gapped up to start the week on Monday and then traded down essentially the entire week. So this is it's called a dark cloud cover pattern, and when you see this after a prior steep uptrend, we have some bearish divergences in there as well. As you can see, the RSI on the weekly basis peaked back in the summer and has since been making lower highs. So there's a couple of bearish divergences. We noted last week that on the daily period, there's fewer and fewer companies trading above the 50-day moving average, and the number of companies making 52-week highs peaked in the first week of the month. So there's a number of bearish divergences going on out there. At Friday's low, we did fill this little gap here, and now we're bouncing higher. But when we zoom in a little further, if we look at the 30-minute time period, we can see we're making a series of lower highs here. So the initial gap down last week on Wednesday or Thursday, the ensuing rally on well, this gap down, I believe, was Wednesday. The ensuing rally on Thursday went into the gap, but couldn't fill the gap and couldn't get above its new highs. And now, even though we're up 2.7% today, we're still below the highs we made on Thursday. So it just looks like we're in a period right now of corrective price action. This could go on a little further, a little deeper. If we look at the semiconductor index, we could see this was a bearish engulfing candlestick pattern, which not only covered last week's or the prior week's body, but the prior 2 weeks right there. So pretty nasty sell-off last week in the semiconductor index. We're seeing similar declines in transportations, some of the regional banks as well. So it's been pretty broad base selling across the marketplace. Given the prior run-up that we've seen, the NDX is up 23% since the start of the fourth quarter. It's very normal, usual corrective price action, which you can often see following a strong move higher. So nothing at this time that would have me concerned at all.
All right, Brian. Appreciate the update as always on the technical side of things. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.